please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session and the markets are struggling. In fact, the Nifty is under pressure. The 10,300 mark has been breached. The Sensex is down close to about 250 points. We had this big mega short covering rally in Monday's trade, but thereafter the markets have been extending losses and now we're just up about 0.5% for the entire week. On the mid-cap index in the red now, this is after opening trade in the green. The markets have lost ground in the last 1 hour, but still relatively it's a better performance, and for the entire week the mid-cap index has seen a gain of close to about 2%. Hi Nigel, what are the internals telling you?
Well, you know, Rima, as you said, it's not looking too good as we speak, and it's looking a little challenging for the bulls in the second half of trade. I'll tell you why, because in yesterday's trading session, we did see the 10,500 call. That's been very, very active. So the 10,500 call should come up for you on the screen. That's added roughly around 9 lakh shares approximately. But important to note that now, in fact, there is a huge amount of open interest built up at around the 10,300 call. So the call writing has come down from around 10,500 to around 10,300, telling you now the bears, they are sensing that they can defend the 10,350, 10,400 odd mark. Just take a look at that. Nearly 15 lakh shares. When we started off trade today, the 10,500 call was most active. Now the most active strike today is at around the 10,300 call. So keep an eye out on that one. In fact, if we see some unwinding there, then we could expect a bit of a relief rally. But if that continues, then that's telling you that in fact the bears, they are looking at eating that premium and defending the 10,400 odd mark. We'll talk about that more later on the show. First up, running you through.
Okay, let's straight away get to our corporate corner then. AG Infra is a stock which is on our radar. Buzzing in trade. This is after the company bagged an order worth 187 crores, which will be completed in the next 18 months. To discuss this in greater detail, we're now joined by Mr. Harindra Singh, the MD of the company. Good afternoon and thanks so much for joining in. You've been declared an L1 for an EPC project in Rajasthan. The order size is 187 crore. Some details, what will be the kind of margins you will enjoy on this particular project? What would it take your order book to?
So this is a project which is a 2-lane paved shoulder, 44 kilometers to be developed, and we are looking at the margins which we are already making in almost in the past years. So it is almost coming at 12 to 15% margin, and this is ministry funded project basically.
Okay, and your order book?
And the order book, which you can see that by November it was say 3,700 crores unexecuted. Then we have recently added 1,100 crores out of few HAM and EPC. Now this is the one addition which is 187 crores.
All right, Mr. Singh, you know, you're saying 12 to 15%. If you could give us a more precise number, you know, the big positive in the first half of this year was that your margins went to around 14.5%. Traditionally, you've been doing 12.5%. Right. So you believe that this order will be at the higher end of that 12 to around 14.5%?
No, that's obviously. Yeah. So we are targeting to bid any of the projects where the margin has to be not less than 15%.
Not. Okay, so you're guiding for margins of around 14 to 15% going ahead?
Yeah.
Okay. Mr. Singh, you indicated that you won orders worth 1,100 crore recently and now this 187 crore, right?
Yeah.
All this is in the Jan to March quarter?
Yeah, this is Jan to March.
Okay. And how would this compare with the quarterly run rate of order wins that you've enjoyed in the past? Has there been a pickup in activity in order wins for the company?
No. In first 9 months of this current financial year, we could have only say 200 crores of order. But during this last quarter, we could have substantial numbers.
Okay, all right, Mr. Singh, you know, a quick question. Your order book is swelling up, which is good news, right, in terms of revenue visibility. But what about your working capital needs? Is that as well going up? If you could give us a sense, because I remember the last time you were in our studio, you were telling us about your debt repayment plans as well. So how does all that fit in?
No, that obviously, while we are retiring our debt of 115 crore rupees and then working capital limit, which has been, say, over the almost 1 year, it has been the same. It is 90 crores of the short fund, the working capital limits that we are utilizing, and we are maintaining with the same.
Okay. Mr. Singh, let me come back to this, order inflows. And the incongruity there. In the first 9 months, only 200 crores. In Q4 itself, you won orders worth close to about 1,300 crore. Is that going to be a trend, or has there been a pickup in demand and investment?
No. It is a kind of a trend, because in first 6 months, almost for GST, there were not much of the bids were there, and last quarter has been significantly, or government focus is there and want to award, I think, most of the projects in this quarter.
What is your estimate of order inflows for FY19?
For next year?
Next year?
We are looking at it for the current year. We would be tentatively, we are looking at another addition of 1,000 crores, and for next year it would be not less than 2,000 to 3,000.
2,000 to 3,000 crore of order inflows in FY19.
Yeah, 19.
Okay, thank you.
All right. Thanks so much, Mr. Singh, for stopping by and giving us all those details. But just keep an eye out on the markets. We have moved to the low point of the day. Burras is under some pressure. A few stocks have taken a bit of a knock. Tata Steel now on the verge of breaking the 600-odd mark, so keep an eye out on that stock. We have India Bulls Housing as well. That's moving lower. But I think a couple of larger names, maybe an L&T should come up for you. That stock as well has seen some selling pressure. JSPL, well, keep an eye out on that stock. Remember, we did have Mr. Naveen Jindal telling us here on CNBC TV 18 that watch out, we could raise some money, and that's precisely what's happened. So the JSPL board has approved a QIP, and they've not really specified the amounts. But if they go, I think the sense that the street was getting was like they're likely to go for around 1,000 crores or thereabouts. So that will be nearly around 5% of the current market capitalization. We'll keep an eye out on that stock. Remember, the stock has corrected big deal from around the 290 rupees all the way to around 230 rupees. What the street wants to know is two factors. How do they bring down their debt? Remember, Mr. Naveen Jindal told us there are two options out there. One is doing a QIP. The second is listing some of the international businesses as well. Yesterday's trading session, we saw NR Agarwal Industries. The stock was high after the promoters released all the pledge that was prevalent on their on the shares that they held. And in fact, today as well, we have some news that Bank of Baroda has lowered the interest rate on one of their term loans and cash credit for the company. To understand what does all that mean for the shareholders, well, we have Mr. R.N. Agarwal, the chairman and MD of the company, who joins us. Hi, Mr. Agarwal. Thanks so much for joining in. Well, a couple of good news coming in 2 days. Your shares, I believe, are totally pledge free. So that's good news, isn't it? And give us some, the rate at which you were borrowing at, and post this reduction from Bank of Baroda. How much is it? What would it mean in terms of interest saving?
See, we have been doing exceptionally well. In the last year, we performed well. This year also has been good for us. So bankers, we were had borrowed some from Bank of Baroda. So our shares were pledged. But now the entire shares of the promoters are being released, and that's good news for the company and for the investor. And previously my borrowing rate was 12.25%, and now it has been reduced to 11%. So there's a saving of 125 basis points, which is substantial. Okay.
Mr. Agarwal, afternoon. The company has indeed come a very long way. Just in 2016, you had exited the corporate debt restructuring, and now, you've managed to remove the pledge on your holdings as well. If you could tell us what is the roadmap by way of the company's debt, what is the current debt, and how do you see it going forward? Are you planning to reduce it further, and if yes, how?
See, our current debt is around, long-term debt is around 220 crores and working capital of 100 crores. So roughly there is a debt of around 350 crores. We are not planning to retire our debts before time, in spite of we having sufficient cash accruals, because we are looking for a project expansion. So we are looking to expand in craft sector. We are given Ernst & Young to study the project, to find out the techno feasibility and the economic feasibility of the project. So we feel that we should expand and maybe strengthen our hold in paper industry and take care of the good times, because paper industry is looking ahead for a good growth, and we want we are one of the big players. We are in top 10 paper manufacturers in India. So we want to see that we encash upon the future growth which paper industry offers to the company.
Mr. Agarwal, you said your total debt plus working capital is 350 crores, right? So 125 basis points reduction would mean around 3 to 4 crores of saving in interest cost. Is that correct?
Right. Yes, that would be correct. So that is, maybe it's not that big, but it is good substantial.
Okay, all right. And you were saying that you're maybe looking at expanding capacity as well. So give us a sense, your current capacity utilization levels, what are they?
Correct.
And
yeah, see,
go ahead.
See, we are into two types of product. One is a packaging board, which is called duplex board. We produce 500 tons of paper board, and we also produce 500 tons of writing printing paper. So as on today, we are producing around 1,000 tons of paper per day, which converts to 3,25,000 tons per annum. And we have a turnover of around 1,200 crores. And our EBITDA is around 13.5%. So we are generating enough cash to not only take care of our debt, but we would have surplus in the next 2 years to maybe look at expansion. So we are looking at a project. We feel that packaging has a very good growth in future, especially the kraft paper, which is used for making corrugated boxes. With this e-commerce business and all, this particular sector is looking at a growth of around 8 to 10% every year. So we are looking at a big project in that segment, which would be around 1,50,000 tons. So we would add almost 1,50,000 tons to our existing capacity of 3,25,000 tons. So we would reach 500,000 mark. So it is not only the terms of expansion or quantity we are looking at. We are looking at the right product, right technology, and good size of project, which would give benefit of economies of scale, and our overheads would be such that we will be able to compete most of the players which exist in India and also the imports. So we are fairly stable at this moment, and we want to expand and be a prominent player in paper industry in India.
Mr. Agarwal, if you could tell us what is the growth rate that you see in each of these segments. One is in the paper board or your Duplay board. Secondly, in writing and printing. What is the growth rate in these segments, and what is the current breakup in terms of revenues?
Yes, see, I'll break up paper manufacturing mainly into 4 grades. 2 grades fall under the packaging sector, which is our existing product duplex board, and one product is the kraft product, which we are looking at. So the maximum growth I foresee is in the kraft segment, where we don't have a presence. No doubt it is a low-end product, and the margins may be slightly lower than the high-end products. But the growth in kraft segment, we are looking at, it would be more than the GDP growth in India. So it would be somewhere around 8 to 9% growth in kraft segment. In duplex board, it is also a packaging board, but it is used for small packing. Okay. So maybe the growth there would be around 6% to 7%.
All right.
And in writing printing segment, where also we have our major presence, the growth is not as much as what is in the packaging sector. So there, conservatively, I would put it at around 3 to 4% growth per annum. Okay. So the growth, if you see per se, is more in kraft segment. Maybe the margins are slightly less there, but the growth is much higher. So we don't have a presence in that segment, and we are going to exploring the possibility of being there.
Okay, all right. Thanks so much, Mr. Agarwal, for stopping by and giving us all those details. You're sounding quite optimistic, so all the best for FY19. But the markets, we need to focus on the markets as we speak. We're 100 points down on the Nifty. We have Tata Steel that's taken a bit of a knock. You have BPCL as well that's moved to the low point of the day. 100 points lower. Just take a look at that. India Bulls Housing Finance as well has moved to the low point of the day. The mid-cap index that was doing a relative outperformance. Pull up the crisscross lines. We had far more stocks that were advancing than declining. Now you take a look at that. They've kissed each other. Now you have far more stocks that are declining in comparison to the stocks that are advancing. India Cements is getting a bit of a knock. JSPL as well. So a whole host of those mid-cap stocks as well. High beta basically is taking a bit of a knock. You have SAIL as well. That's taken a bit of a downtick in the last few minutes. So it's going to be an interesting second half of trade. But as we speak, the bears, they're on top for the first half of this trading session. So